all signs seem to be pointing towards a major war down the line. Gold is moving away from London and into the United States. They're big gold and silver bowls. That's being emptied. Some entities are asking for delivery at a pace we have never seen. You never really let on the true severity of a crisis to the public because that might elicit an even bigger crisis, right? That might elicit panic. There's a lot of things happening in the background. It does seem like they're putting all the preparations in place for something big. There is going to be a new ordering of world powers. Gold is going to be central to all of that. Someone is trying to put a lid on this thing, but they are losing control of it.
World War III is already happening.
This is a house of cards, and it is in the process of collapsing right now.
You're going to see an economic crash, the likes of which we've never seen.
All right, folks. Canadian Prepper here. Today on the channel, we got a very special guest. We got Danny from Capital Cosm. He's a fellow YouTuber. He has a podcast that covers topics like commodities, crypto, global shifts in the financial space, and Tiatwaki, the end of the world as we know it in a, well, financial sense. He has a background in data science and analytics, and he interviews a lot of great guests. So I would encourage you guys to go and check out his channel. So what I'm hoping to get from you today, Danny, is kind of like your high-level meta-analysis of where you think this whole financial system, global reset stuff is going. You know, what are some recurring themes and trends and lessons that you've been able to amalgamate from this very comprehensive roster of guests that you bring on your platform?
Yeah, first and foremost, Nate, thank you so much for having me on. I really do appreciate it. I mean, I've been keeping up with your channel for a few years now, and your daily update videos have become part of my daily routine. And I'm not just saying that because you invited me on your show, but it's just the information that you aggregate as well is it's a great debrief at the end of the day, let's call it. But to answer your question, a high-level view of what's going on in the gold market, you're correct. We are flirting with the $3,000 level. Now, we have been making new all-time highs, I think somewhere at the tune of 20 or 30 all-time highs over the course of the last 1 year. And so what makes 3,000 so special? Well, it's psychological. And markets are always psychological. Buyers and sellers act on psychology. All the market is. It's based on psychology, and it's based on confidence. What I'm looking at, and I alluded to this before or right before you introduced me and started the show, was that all signs seem to be pointing towards, I dare say, a major war down the line. Now, do I mean a war tomorrow or next week or a month from now? Not necessarily, but there does appear to be an incentive behind all of this gold buying from these central banks. And that's mainly who's been buying all the gold. It is these central banks. It's not Walmart. It's not, Costco shoppers, raising the price of gold over $1,000 within a little over a year's time. Again, keep in mind the market cap of gold is at what, 22, somewhere north of $20 trillion. So to move it 50% is no easy task.
Yeah. And
you really have to have serious capital to be able to do that. And we can go through some charts right now that kind of illustrate why I say this, why retail hasn't even truly begun focusing in on gold. Retail is still kind of fixated on NVIDIA, even though the NASDAQ has crashed, I think 15 some odd percentage points. There hasn't been enough pain yet for the retail investor to pay attention to gold. Gold and it's also because there's this generational aspect to it with these hedge fund managers who grew up, who really sharpened their teeth in the 80s and 90s and so forth. We've mainly been living in a Fed put environment where you can just rely on the Fed and the Fed plunge protection team to always bail you out. That may not always be the case. And so there's a lot of biases that we have to detox away from our system.
And it's certainly not cool to buy gold, right? Because for one, you can buy the paper gold, but most people aren't willing to take physical delivery. Most people, they want it fast. They want to see gains right away. And like you're saying, there's a generation, basically since 2008, which a whole generation has now elapsed, where all people have known is a bull market. And it's not being popularized in the media at all. If it was, I think we would see the price much higher.
Yeah, and to piggyback off your point there, if you look at the average holding time of a position of any kind of investment position today, it's around, I think the latest recording was in 2022. The latest data point that I saw was around 6 months. Now you fast forward back to the 1960s, the average holding position for a stock or any asset was close to 10 years.
Wow. That's
So
interesting. I never knew
there
that.
is a generational mind shift that probably needs to be. There is going to be a reversion to the mean, and you can kind of see it happening with gold. Gold, not just gold moving close to $3,000, but gold also breaking out versus the Dow, breaking out versus the S&P, the Nasdaq, real estate. Now, when you price all of these assets against gold, we're not at an all-time high in the markets, because those are priced in fiat. Those are priced in dollars, a moving target. When you look at assets, you have to ask yourself, compared to what? And gold is, yes, there's a, I think the annual production rate of gold is around 3,600 tons a year. So that's how much gold is excavated from the earth. We can get in, and let's go ahead and dive right into the COMEX and the LBMA, what's happening there. The LBMA, the London Bullion Metals Association, which is basically where JP Morgan and HSBC have their big gold and silver vaults. That's being emptied. Some entities are asking for delivery at a pace we have never seen. And deliveries have gone up from 4 days to 4 to 8 weeks now.
All right, guys. So as some of you know, Canadian Prepper is a fully independent channel. We don't have sponsors and we're beholden to nobody. You can help support us by supporting yourself by gearing up at CanadianPreparedness.com. I know that in an emergency, having the right gear can make all the difference. This is why I've tested and curated the best preparedness products on the market so that you can be confident and ready for whatever comes your way. Now, back to the video. Do you know the exact amount as of, do you have a current update on the exact amount? Because the last I heard, it was like 2,000 tons that have been moved.
Yes, and that's significant because in years' time, over the last 4 years, from 2020 all the way up until 2024, you had 2,000 tons of gold come into the COMEX vaults. At this current rate, we're going to hit 2,000 tons within a year. Gold is moving away from London and into the United States, and not just London, Switzerland as well.
And why do you think that's happening? I mean,
well,
there's a variety of reasons that I can surmise, but what are your thoughts on that?
Yeah, I talked. This is a question I often pose to my guests, and when I asked it to Martin Armstrong, his reasoning was that the capital is fleeing from London and Europe because it's not looking really good out there in terms of peace with Russia. You have all these headlines coming out with Estonia wanting to redo the draft, Sweden saying that we need to do military conscription by the end of the year. Keir Starmer saying we need to have boots on the ground in Ukraine, France, saying similar things. So Europe is getting on a military footing. And if you look at what happened in World War II, Europe was ravaged. And all that capital from Europe flowed into the United States. And a large reason why we had booms and from that point on, and from the post-World War II order, is when America really came onto the scene as the superpower. Because all that capital went from Europe. We went from Pax Britannica to Pax Americana. And so something similar to that could be happening right now, where the European markets are even worse shape than the American markets. You're hearing this stuff about $10 trillion being taken out. Have you heard this? $10 trillion being taken out of savings, people's savings, to fund the military in Europe. And the Trump administration seemed to have passed the baton over to Europe they may not be, Russia doves per se, but it could just be more of a logistical means, as in, you know what, you guys, we're still a team, U.S. and Europe, etc. But you guys need to focus. You guys need to take Russia on your own because our opponent, our big target, is China, and most likely Iran as well. So I think that's where the U.S. is setting its sights on is the Indo-Pacific, and they most likely don't want to fight a multi-pronged war. I have a couple of charts here I can show you,
I
Nate.
just wanted to add something to that too, is that recently I've heard that Europe is actually divesting some of its assets from the United States. So they're actually getting out of US equities and reinvesting in their own war mobilization. So it's kind of I think what you're saying is true in that the United States is most certainly pulling its gold reserves, possibly because they're worried about World War III perhaps being more regionally bound to Europe. But it seems to be a little tit for tat as well, in that, now the euro is strengthening compared to the dollar because of this reindustrialization as a result of the war mobilization that we're seeing. So it seems like they're banking on there being at least some temporary boom in the European market as a result of this war. And as I'm not sure if you've interviewed him, but as Salente always says, when all else fails, they take you to war. Europe under austerity, and you're seeing. The only way that a lot of these guys can remain in power is if there's a barbarian at the gates. So they need a figure like Vladimir Putin to rally around the flag. And it seems like that's kind of what's happening in Canada, only it's Trump, who's the orange-haired barbarian at the gate, or the orange man barbarian at the gate, whereas in Europe, it's Vladimir Putin. So, yeah, it's a very complicated state of affairs. But you said you had some charts to show us.
Yeah, yeah. And just really quick to kind of, put a bow on this really quick. It does make sense what you're saying. Europe does need a power up because if the United States is to effectively pass on the baton to Europe, Europe does need some power up to stand a chance. Because you look at Estonia, it has like 4 planes in its air force, and I think the UK has like a standing army of like 50 to 70,000 people, that can barely fit a soccer stadium. So they do need a bit of a boost, so to speak, to be able to stand somewhat of a chance against a battle-hardened Russia, who haven't just been fighting Ukraine for the last 3 years, but they've also been present in Syria as well. So it's a very experienced army against a not so experienced army in Europe. And maybe they want to get their European army at long last. There does seem to be this desire of another Napoleon in Europe, but there doesn't really seem to appear to be anyone that has the charisma or the aura, as the kids would say, of that. I don't, Macron certainly doesn't have it. So it's going to be hard to mobilize the troops over there in Europe. I'm not too confident in what they're doing, but let's go ahead and pull up these charts here. This is just Google Trends data. Anyone can pull this up on, by just going to Google Trends. And basically what I'm doing here, I'm looking at the search term query volume for both buying gold in blue and buying silver in red. So this is tracking how many search queries happen on Google over time. This goes all the way back to 2004. And despite gold teasing a $3,000 handle, it's still indexed to about 50% of the interest, 48% of the interest that was at the peak here in '08.
And back then, I'll add that there was much fewer people online.
Exactly. The internet adoption curve. This isn't even controlling for that. When you do that, I mean, you would effectively bring that down to a 12.5% index. And then
this doesn't
silver,
even include China, right?
So it's worldwide.
Okay, but does
I would,
but does
yeah,
China
China
not
has
have
the
their
blockage.
firewall?
Yeah.
Yeah.
Yeah, so they got the whole internet block firewall thing going on. So yeah, this doesn't include China, and silver has barely gotten off the mat. I mean,
Yeah.
it's just been moving in the same direction. We did have a little spike up here in 2021. We had a little
Right.
short-lived,
Wall Street bets.
yep,
Yeah.
silver short squeeze, but that was about it. It was pretty much a fart in the wind. But now if you shift over to some of the ETFs, this is where it gets interesting. So GLD is the preeminent gold ETF.
Yep.
It's basically, if you want to buy gold without having the hassle of, delivering it to your house and storing it, you could all just buy the paper gold.
Hmm.
And what you're looking at here, number one, you have the price of GLD here denoted in this black line. And then you have these green bars, which denote the volume of institutional ownership of GLD. So what is institutional ownership? Institutional ownership is like hedge fund managers, it's family offices, it's smart money, effectively. Now, what you'll notice is that, yes, the price of GLD has gone up, but the volume has remained stagnant. Okay, so what's my point here? Well, let's move on over to the next chart. This will be very staggering. This is another gold ETF called the Sprott Physical Gold Trust. Now you see the opposite here. You can barely even see the line, the black line that denotes the share price, but the amount of institutional buying happening on PHYS, the Sprott Physical Gold Trust, is overwhelming. So why is this important? GLD holds its gold in vaults in London. And there's been these accusations that there's multiple claims to gold for a single unit. So say you and I, Nate, we could both have the same claim to the same ounce of gold,
Yeah.
and GLD would record that. It's effectively a way to kind of keep the gold price down. Sprott, on the other hand, does not do that. Sprott is, there's a lot more confidence in Sprott in the community. And so you're seeing the smart money go into Sprott and not into GLD. And you see kind of a similar thing with the silver ETFs. This is SLV. This is JP Morgan's silver ETF. Again, the preeminent silver ETF. Now, we did have a bit of a spike here last month, but still, you compare it to PSLV, which is the Sprott Physical Trust, no comparison. So this basically tells me smart money has less faith in
The
JP
paper
Morgan
Yeah.
getting their gold and silver out of JP Morgan than they do out of something like Sprott. So the clues are there. The clues are there.
So they definitely think that at some point, then physical delivery is going to be important, and that it's pretty much a statement of a lack of confidence in the paper markets.
Yep. And I actually have another chart here I forgot to mention too. So this is looking at US. So this goes all the way back to the 1800s. This is my kind of chart because the longer the time frame, the more confidence you can have in your conclusions and assertions. So this is looking at US inflation from the 1800s. So let's break this down. From 1774 to 1912, you had an average annual inflation rate of minus 0.2%. So effectively flat. You didn't really see much deflation or inflation. If anything, you saw a little bit more deflation for 150 some odd years. Now move over to 1913, and this chart only goes up to 2015, unfortunately, but you can kind of get the point here. From 1913 onward, boom, you have 3.3% annualized inflation. And okay, 1913, that's when the Federal Reserve came onto the scene. You had this big explosion in inflation. Another important factor to it is, I don't know if you can read this or not, but each one of these big inflation episodes in the 1800s, you see it kick off here.
Yeah.
War of 1812, 1865 inflation, Civil War. World War I, huge inflation. Vietnam War, huge inflation. So there's not been a war that I'm aware of that has been deflationary. All wars are inflationary. I think this is so if you're projecting out if your mental model is that we are going to have this big world war, this great war. Again, I'm not saying it's going to happen this year or the next, but somewhere, I don't know, 5 years from now, 10 years, I don't know. But if you anticipate this war happening, then you also have to anticipate these inflationary cycles kicking in. And it's not, there's two different types of inflation, right? There's the inflation that comes from the demand side through speculation, which is, like what you saw in 2000 with the NASDAQ bubble. But then there's also supply side inflation, which comes from shortages. And with all these tariffs coming into place, when you stop trading goods, you stop bullets. That's the saying. That's how the saying goes.
Armies cross borders. Yep.
Yep. So
Good trade zone.
globalization was deflationary.
Yeah.
Deglobalization, ergo, has to be inflationary. So we are starting to see a little relief. We got the CPI numbers come out the other day at 2.8%. So again, that doesn't mean inflation has gone down. It's just
I think that's more a reflection of oil prices going down.
Yeah.
It seems to really, you can almost set your watch to it. If oil is down, then CPI is down. And, so as long as Trump can keep that suppressed, he might be able to mask whatever inflation is a result of these tariffs. But like you're saying, the peace dividend ultimately is going to, its suspension is going to lead to inflation, because when you're building stuff just to be blown up, it's not, generating anything, right? It's just destructive.
Yeah.
So
it's like the analogy of the broken window. Have you heard this?
Can't say I have.
So suppose you have a shop, someone comes in and breaks your shop's windows. Now you've got to pay someone to come in, fix your windows. Was there any value added to the economy there because you had your windows repaired? No. Now you spent precious capital that you could have spent on opening another chain or buying or lowering your cost or something, as opposed to that. Now you're having to fix your windows.
Yeah. But they would count that as economic growth.
Yeah.
Mistakenly. Yeah. So you think that gold is likely going to rise in as a result of this, but what does that really mean at the end of the day? Because like you said at the beginning of this talk, $20 trillion market is difficult to move. So where does this money come from? I hear these wild valuations of 10,000, 40,000. Well, that capital has to come from somewhere. It's just like when Michael Saylor is talking about, crypto consuming the world's capital. Like, where does it come from? And where do you see it going in the, I guess, near to long term?
Yeah, sure. And again, with inflation, of course, you get a rising gold price. So all of these wars that occurred that saw a spike in inflation would also see a spike in the gold price, because it's not really gold that's going up. It's fiat that's going down.
Yeah.
So to answer your question, where is this money coming from? This is what your audience has to kind of get a grasp on. With markets, it's all about capital rotation, right? Sure, we print a bunch of money. We're always adding to the money supply. We saw a huge jump in the money supply over the last 4 years. But if you look at the allocation of gold in hedge funds today versus where it was 40 years ago at 2%, it's currently at 0.5%. So hedge funds, family offices aren't even allocating to the same, nowhere near the same degree as they were back in the 80s. Now, once we have this currency reset, it's a different story. You look at what's going on today. Yes, we are seeing a correction in the markets. The NASDAQ is up, or NASDAQ was up. It's gone down now. But on a relative basis, I think a visual will kind of showcase this better than anything. So here is...
And sorry, you said back in the 80s, exposure to metals was much higher?
Yes, much, much higher for hedge funds and family offices. Today, it's like 0.5%. It's not even on the radar screen. Now, I put forth the notion that 2% is probably going to be a little on the low side, given that we are going to go through a currency reset. There is going to be a new world order. I'm not like talking about the conspiracy one, but like a literal new ordering of world powers. And so gold is going to be central to all of that. And for the longest amount of time, we've just seen capital just jump into passive funds, which just invest in the S&P and the NASDAQ and the Max 7.
Yeah.
I'm contending that that capital will eventually flow into a capital rotation event. Now, I didn't make up this word. My good friends over at North Star Bad Charts did. And it usually happens when gold starts outperforming the S&P, the Dow, the NASDAQ, and you start seeing this capital rotation out of growth and these kind of stocks and into commodities, into gold.
Right.
And so when you price the S&P, when you price the NASDAQ against gold, so this is the S&P divided by the gold price. And what you'll notice is we pretty much hit a high in 2000 and we haven't come back anywhere close to it, right? We had a little bit of resistance here.
So this is the S&P divided by the gold price?
Right. So it's essentially pricing the S&P in gold, not in
Okay.
dollar. It's basically telling you we haven't really been in real terms,
Yeah.
the S&P hasn't been making new all-time highs. And you see,
All right. So Warren Buffett's advice to just buy the S&P 500 is actually, looking at this chart, then a losing battle.
right,
Not
compared
to
to
throw
buying
shade
gold.
on the Oracle of Omaha, because I respect the fact that he's all in on cash and waiting for this very patiently, but this tells a different story.
Yeah. And you're sitting on this support line that you've built up over the last 40 years. And if we break below the support line, then that's basically telling you that the price of gold is going to outperform the S&P. And that's when you start getting retail investors, meaning people like you and I, people will start pouring into gold. I mean, I don't know about you, but I haven't heard anyone like a barber or a store clerk or anything mention that they're going to buy about buying gold or silver. Everyone still seems to be in the mindset of buying the latest scam coin and trying to win out big on that.
Yeah, I mean,
But
there's the Costco thing, but I don't know what the reach of that really is. I mean, I think there's some exposure there, but it doesn't seem like it's become a pop cultural phenomena yet.
yeah, and it's not enough money. It's like in the tens of billions, isn't it? I believe, or could be in the hundreds of billions. But again, compared to the overall size of the gold market, it's really chump change. Same story here with the NASDAQ. When you price the NASDAQ against gold, I mean, you're nowhere near the all-time high in 2000. You've actually just broken down this major support line. And why is this relevant? Well, when capital exits the market, it exits the riskiest assets first. If this follows through and we don't get a retest back up, this could imply that we could see similarly the S&P follow in the footsteps of the NASDAQ, which is the leading indicator of a winding down of the bull market, so to speak.
And I mean, it would make sense, like if we're going into a war mobilization mode, a lot of the technologies are more industrial based. I mean, I'm sure there's automation, there's AI that's going to be fueling a tech boom of sorts, but it seems like war mobilization in itself is pretty rudimentary technologies. Like the bulk of that market is more, I'm just guessing here, but tied to commodities. So could you, I don't know, could you elaborate a bit more on this commodity super cycle idea? Because I think a lot of people they haven't really wrapped their heads around that. I know I've seen some charts that really put it in perspective right now that show the price of commodities versus the price of other equities. And right now it's at pretty much all-time lows, relatively speaking, more or less.
Yeah. So again, the commodity super cycle is in name a cycle. So what happens in these cycles? Let's rewind back to 2011. We had a huge spike in commodity prices, and you had so much money coming in to investing as capex into commodities from that point on that it brings so much supply into the market, then it crashes the market. So high prices fix high prices essentially. And then when commodities come down, when the price of commodities come down in the aggregate, they suffer from lack of capex. So it then over time, it creates supply shortages. Those supply shortages create an increase in the price. An increase in the price is what we saw in 2020. That was probably the precursor for the real commodity super cycle to come once we get further and further enveloped into this commodity super cycle as we head into this war cycle potentially. Because still, I mean, we're still not seeing the capex go into these mining companies that they need. I mean, they're still fairly dried up from capital, like these mining companies, these oil service companies. There will be a need for more energy, obviously, as the third world begins to want to industrialize. But where are they going to get it? You can't get this stuff out of the ground so as easily as one may think. You got to do permitting, then you've got to do exploration, you got to develop the mines and then mine it itself, and the entire thing is a headache. So it takes time to do this stuff. So by the time you actually really do need it, it's like an oh shit moment. We should have been doing this a long time ago. But
Yeah, and that's something so many people forget is that 90% of the world uses like 1/30th the amount of energy as the average Westerner. And, eventually there's going to be pressure for them to want access to those raw materials that they need to take things to the next level, which will be very inflationary. We live in this bubble in the West where we just view the equities markets as existing in isolation, but we have to really look at that big picture to understand the true demand that is coming. And even if oil if oil crashes to $50, I don't think it's going to stay there long, because you're going to have it scooped up by, everybody at that price. So it's Jevons paradox in that, the cheaper the energy, the more it's used. So I think the same is probably true with most commodities.
yeah. I mean, it's all the same mechanism.
What are your thoughts on crypto and Bitcoin? I mean, I was listening to a Michael Saylor presentation, and I'd be more than happy to have the guy on the channel and just have a chat about these sort of things, because I really want to understand Bitcoin. I mean, I've been listening to talks and reading material about it for years, but I've never been sold to the same degree that a lot of people have, the conviction that many have. And I understand the concept. I understand in theory why it's a good thing, the decentralized aspect of it. But I'm not entirely sold on it for some reason, because there's so many weird red flags surrounding it. When it came out, who invented it, how it cannot just be replaced by something that's better. What are your thoughts on crypto and how it factors into this transition that we're in?
Well, first off, here's an interesting tidbit. Do you know what the etymology of the name Satoshi Nakamoto is in Japanese?
I think I might have heard it at one point, but it escapes me at this point. What is that?
Yeah, so it translates to center of intelligence in Japanese.
Censor?
Center of
Center
intelligence.
of intelligence. Okay.
So I thought that was very interesting. I'm not alleging anything, but
And that's proven. That's not just
yeah. I mean,
scuttlebutt?
yeah, you or anyone else in the audience can look it up. It literally translates to center of intelligence.
Wow.
But as it relates to your question, yeah, I'm kind of in the same boat. I'm not a big Bitcoin fan. I do see, if you're looking to speculate, more power to you. And first of all, guys, I'm not a financial advisor. This is just my opinions. With Bitcoin, you've got to ask yourself, if Bitcoin was a true competitor to fiat currencies, do you think all these other countries would let Bitcoin run loose? You mean you don't think that they'd ban Bitcoin if Bitcoin was an actual competitor to their domestic currency? So I don't see Bitcoin as a competitor. I still see it as a speculative asset. And if it ever really does a competitor, governments will just ban it. Like people will say, oh, well, it's, we could still trade, we'll put it in our thumb drives and we'll do everything in the black market. Well, you may, but a lot of people may not. I mean, this will incentivize a lot of people to just sell their Bitcoin because they may not want to be liable for criminal charges should they be found to have been holding Bitcoin. So
I want to believe, okay, like Mulder, I want to believe that there's something to this. But when I listen to these presentations, it just seems like a bunch of culty rhetoric. Like all these analogies and energy and networks and, okay, but it just seems so replaceable. Like it seems like it's something that could be done so much better. And it's the origin aspect of it, which really, like center of intelligence, like you said, the time that it came about, and even the fact that it's recognized by, like you go on Market Watch and it's one of the tickers on there. It's one of the, it's almost like they want people to go into that to kind of maybe take a little bit of the pressure off the gold markets, perhaps.
Yeah, that's one theory out there. I mean, who knows? Who knows why they push? I mean, they also like making money. They also
Mhm.
like viewership. They know Bitcoin has a cult following. And if they cover Bitcoin, it might give them views or ratings or things of that nature. So, it may go many different. I mean, there could be many reasons as to why they push it, or it could be, like you alluded to, just like a pump the 99% assets into intangible assets.
Well, I can almost understand something like Ethereum more, where there is almost a digital industrial application to it. In the digital economy of the future, if we're talking about virtual worlds or something, I could imagine a situation like that where a certain type of currency or contract like that would be amendable to that sort of thing. But yeah, Bitcoin in and of itself, I'm very skeptical of, which I still have a little bit of exposure. Just you never know, right? Speculative, but yeah, I mean, I'm putting most of my stuff in physical where possible, and not just physical gold, but stuff, like actual things that can regenerate. I mean, it's amazing to me that you have whole coiners, as they call themselves, who don't have don't own land or don't own
Right.
stuff that can actually help you ride out hard times.
Well, it's this migration out of meat space and into digital space. People
Hmm.
are beginning to live in the digital world,
Yeah.
and it's too inconvenient to deal with something physical like having to maintain a plot of land. And sometimes it's just easier, just with a click of a button, I can just buy this one thing and it might double or triple or whatever in the next several months really quick, and I can just get out really fast. That's the mindset that's inculcated people nowadays. It's this again, it goes back to the average holding time. 2022 is 6 months. 2025, I don't know, maybe it's 3 months by now, 3 months now. Who knows? But
It's
the
ephemeral.
the
Like
attention span
every
has shrunk.
commitment is ephemeral. And I have this other theory that there's, when you're a person who is digitally dependent and your entire life revolves around Uber and skip the dishes, and you're basically living with a virtual reality headset. You sit at your computer all day, and it's almost in your interest to counteract or resist anyone who is in the physical space, because they almost pose a threat to that system in a way, right? Because anybody who is out there on the land with their chickens and is self-reliant and has that capability, well, I mean, as far as the government is concerned, they're a potential liability. Like there's something that is out of their control. But if you're a person who is really enmeshed in this digital economy, and everything you're completely dependent on somebody else for some elaborate, supply chain for, then you're almost going to have like this knee-jerk resistance, and you are going to reject things like gold and silver because whether you know it or not, it is really against your interests to support that because it infringes upon this, digital ecosystem in which you rely on.
Yeah, I think you're totally right. It's kind of like that same phenomenon when you see, when you have buddies and you start succeed and kind of outgrow them, they become resentful. Nate, you've got land, you've built out this entire platform. You've gotten yourself prepared. I can't acknowledge you as having succeeded because then I'd have to acknowledge something that I should have done.
Yeah, if there's any whole coiners watching, just cash in 1 Bitcoin. Get a shipping container, fill it up with preps, and just forget about it. And in 20 years, it's probably going to double or triple in value. So,
well, it's interesting because if you look at the Bitcoin chart and you look at it from a lock scale or any scale in general, you'll notice that the new highs that it makes are lesser and less versus the old highs. If we did top out this bull cycle at around 109,000, that's not even a double from the previous top at around 65,000. Before that, it was 19,000, which was over a tripling. So it went from a tripling to a 1.5x, 1.7x or something like that. So each subsequent high is, you see what I'm saying? It's decelerating. And that makes sense because it's harder to find capital the higher the price goes. But, to expect Bitcoin to go to, maybe it goes to 1 million, I don't know, maybe in 10 years, who knows. But to, expect this thing to be dependable. Here's another thing. Bitcoin came onto the scene after 2008. Like you said, it's never had to really face the pressures of an economic downturn. We had that brief episode in 2020 where everything crashed, but that was about it. Bitcoin has never really had to weather a storm. It's always, the wind has always been behind Bitcoin's sales. It is no longer behind Bitcoin sales now if what we're seeing comes into fruition, if what we are seeing actually manifests a recession or something worse or a significant market drawdown or crash. Will Bitcoin still? What will happen to Bitcoin then? All I'm saying is that Bitcoin right now is in untested waters.
Yeah, absolutely. It's a risk on asset. There's no doubt about that. There seems to be a correlation with it and the NASDAQ. I mean, you look at what's happened with the NASDAQ in the last few months, and Bitcoin is very tightly correlated to that. So you have a 15% retracement there and a 15% reduction in crypto as well. Do you have any other things that you're bullish about? I mean, a lot of the people that we interview, our mutual acquaintances, are rather bearish, and rightly so. But do you have any other, commodities or market plays that you are personally a bit more bullish about?
Yeah, I think Chinese stocks, if you've got the right broker, Interactive Brokers has the Hong Kong exchange. China has been taking a beating right now, the Chinese market, that is, over the course of the last 2 to 3 years. And so, I picked up a Chinese technology ETF not too long ago, and it's already up quite a bit.
Peter Zion has entered the chat.
Am I about to get deleted?
I don't know. He's going to remind you of the demographic crisis in China.
Oh, yeah. Well, that's not going to happen. You won't have to worry about that unless you're anticipating holding a stock for like 20 plus years or something like that. But yeah, anything that you can find, which is hard, that is uncorrelated, that can be uncorrelated with the US markets. So obviously when America catches a cold, the rest of the world gets pneumonia. And so when the US markets crash, it kind of creates like this margin call crisis in all these other markets because a lot of investors have positions in American stocks. And once those stocks go down, then they have to meet the margin calls on those stocks by selling other stocks. And so it creates kind of like this domino effect. So you have to kind of look for markets where there's as little correlation as possible with the American market. China being one of them. Argentina is another good one. If you look up ARG, I believe that's the ETF. I don't own it, but I've been tracking it for quite a while, and it seems it's seen a pretty good increase. And Argentina still has a long ways to go to fix its problems. I think they record like a two some odd percent or a 1.9% inflation rate. this past month, which is a huge improvement. But yeah, we'll see what happens there. But yeah, energy, as we've talked about, if we are entering a war cycle, energy is going to be big. You're going to need your oil service companies. You're going to need your rare earth mining companies.
Well, especially with AI, I mean, that's going to suck so
Yes.
much energy.
And then, I mean, look, I mean, we were just talking about gold. Gold has been making new all-time highs, but there's a huge gap between the price movement in gold and the gold miners.
Mhm.
So there's now granted, not all these gold miners are they're probably gonna be
Profitable
kind
or
of profitable,
yeah.
but some will. And if you could either buy the ETF, but there's a huge discrepancy right now in gold. Silver, physical silver. If you look at the gold and silver ratio, the gold to silver ratio, it is I think it's an all-time high right now. Means that gold is more overpriced than ever relative to silver. Silver, now forget about mining companies. If I can hold this thing, I have no counterparty risk in my hands, and it's priced at $34, not even at its all-time high. Gold is up at an all-time high. Silver is still 40 some odd percent away from its all-time high. And
And it makes no
silver,
sense because there's a demand for it, right, that hasn't been met. This is an industrial metal that is going to be needed in so many things in the future. Never mind just solar panels, but I mean, there's probably untold amounts of uses for
military
this stuff.
industrial complex. If you're part of the military industrial complex, if you're part of the war industry, do you want a higher silver price?
Exactly. Yeah. You
But
want
I
to
mean, how long
suppress
can you keep
that.
the price down? Eventually, you create shortages by keeping it down.
And eventually,
But
if the multipolar world really starts to take hold, then that whole system of price suppression comes undone.
yeah, yeah, and you're starting to see silver flow out of London too now. It's not just gold, and this is a development that's occurred as of I just found out about it today. It seems like it's happening now with silver. PSLV is seeing record short volume. PSLV is the Sprott Physical Silver Trust. Now, why is that important? Because PSLV actually doesn't rehypothecate their silver, meaning there isn't more than one claim on the same unit of silver.
Okay.
So if I buy a share of SLV or PSLV in this case, PSLV has to go and find that piece of silver and acquire it and ask for delivery. So there's been massive short selling, short positioning in PSLV. You ask yourself, why is that happening? Because think about it. Who's incentivized to keep the price of PSLV down? It's the bankers who want the price of silver to be down. Because if the price of PSLV comes down, PSLV won't be moving towards the spot market to buy more silver, thereby raising the price up even further.
Hmm.
So there's a lot of things happening in the background that something is breaking for sure. And it's not just gold; it's happening cross borders with London and Switzerland. And a lot of my guests who I've had on the show, like Ed Steer, he's been talking about this stuff probably longer than I've been alive. And he told me that he's never seen anything like this
Hmm.
with what's going on with the precious metals industry now. So they're definitely someone is trying to keep put a lid on this thing, but they are losing control of it, and it's we'll see what happens. Something is about to break.
Yeah, absolutely. It seems like a no-brainer for anybody paying attention that, we have all of these people who've been in the game for a long time talking about how there's so much unprecedented events unfolding. And by virtue of the fact that this is not something which is being hyped up in the media, and they're clearly some force out there is trying to, as you say, suppress the price of the physical assets, then I think that tells us that we're on the right path with all of this.
It
And
And keep in mind, China also doesn't want a higher silver price because of their electrification
Yeah.
policy, right? So they're not incentivized to raise the silver price. So I would suspect neither does the United States. Or I could be wrong, but China for sure doesn't want a higher silver price. Am I saying it's China? Not necessarily, but I think China wants a higher gold price. That's why they're incentivizing their citizens through this accumulate program, which is a program meant to exchange your fiat Chinese currency seamlessly for gold.
Yeah. And what is your thoughts on the U.S. equity markets? Do you think this correction is going to turn into a crash, or are we going to see another bounce and the Fed start printing again, a lowering of rates? What do you make of this whole new, I call it cope, but this notion that Trump is doing this intentionally to drive people to bonds to bring down rates, so it's an intentional, the tariffs are being used to crash the markets. I'm not sure if you heard that theory, but my whole thought on that is, well, if Trump wanted to crash the markets, all he'd have to do is come out and say, hey, we can expect a Great Depression, and we would see the markets probably plummet 10%, 20% that day. But what are your thoughts on that?
Yeah, so two things. There was an interview with Secretary of Treasury Scott Bessent on Friday, this past Friday, where he said that the U.S. needs to undergo a detox period or will undergo a detox period. Fast forward to Monday of this week, Trump said that we are entering a transitionary phase in the markets. Now, whether or not that's the plan, I don't know what his intentions are. But from my read of the situation, and if you're familiar with like crisis management 101, you never really let on the true nature or the true severity of a crisis to the public because that might elicit an even bigger crisis, right?
Yeah.
That might elicit panic. So the fact that they're telling us that with all these euphemisms, a detox period, a transitionary phase, it tells me that something, and it's probably pretty bad.
Yeah.
And for the longest time, from the 2008 crash to present day, if you chart out the world stock market, which is an ETF that contains, a basket of world stocks, versus the U.S. stock market, U.S. stocks both have been going up, but U.S. stocks have been outperforming the world stock market since then.
Yeah.
What I'm seeing now with some of these technical charts is that it looks like we're about to hit a breakout period where the opposite is about to occur. So I can pull this up for you here really quick, Nate.
Well, we're seeing
And
that in Europe with the military stocks.
here is the world stock market relative to the S&P. The world stock market has been underperforming the S&P for quite some time, but the last 2 months, these are monthly candlesticks, we've seen a bump up. Now, will it break out of this resistance? That's yet to be seen. But we've hit this resistance line multiple times or gotten close to it at least. It's very, and this is the world stock market on its own. Now, if you juxtapose the S&P next to it, you can clearly see the outperformance there. The S&P is here in red. The world stock market is here in denoted in these green and red bars.
Yeah, you
So,
definitely see that sharp drop off there at the
yep.
end.
And you do see one here as well, but it's not as, let's see. Is
as
it proportional? 9% drop off in the S&P versus a 5% drop off in the world stock market. So yes, the world stock market has, although it did drop, it dropped at a lesser rate than the S&P did. Now,
Yeah.
that's not even looking at the NASDAQ. The NASDAQ is even worse if you compare the NASDAQ to the world stock market.
Well, clearly it's an indication that people no longer view U.S. equities as a safe haven or a way to keep pace with inflation. I mean, what's really striking is the exposure of retail investors versus, the big money. I mean, just you take the graph of Warren Buffett's cash pile and you juxtapose that with retail exposure to equities, and it's like, I wonder what's going to happen, And
And And that's the thing with Warren Buffett. It's people criticize him for potentially missing out on this top, but you've got to look at it the way he looks at it. You're not I From what I've learned from some of my mentors and people that I've interviewed in this space is that you're never going to hit the top and you're never going to buy the bottom. So you're always going to leave money on the table. And I'm sure Warren Buffett knows that. So my my reading of him is that he's willing to sacrifice, you know, he's willing to sacrifice the top to be able to buy at the bottom or somewhere close to the bottom.
Yeah, it's incredible when it's so glaringly obvious what's happening in that the big money is seeing the signs. The big money is hearing dissent. They're hearing Trump, but the retail investor isn't, even though they're telling you what's going to happen, right? Like,
Oh, dude.
if it was going to be, I mean, they could easily come out and say, no, it's going to be fine, right? But the fact that they're giving you a little hint, a little breadcrumb, is telling you how bad it's going to be.
It's a dog whistle to people who are paying attention. Like yourself, like people who are watching the show. That's pretty much a wink and a nudge to, get ready. They're pre-programming the expectations of people. But yeah, I mean, I don't remember if I brought this up or not, but to go back to what's going on in Europe and in Ukraine and so forth, they're now saying that they're going to pull from people's savings account to fund the military in Europe. So they're telling you that, are we going to see bank runs in Europe? Is that going to, move
Yeah,
here?
can you explain that? Because a friend of mine was telling me about this yesterday in passing, and I never quite looked into it. So what are they doing exactly?
Yeah, so I can't remember who it was, but someone from the European Commission said that they're looking at pulling from European savings accounts to help fund the militarization of Europe. And they're looking at about $10 trillion or 10 trillion euros worth of savings that they anticipate pulling out. So it's going to be on an all hands on deck moment for Europe. And from a lot of the guys that I've gotten to know from interviewing these experts, I'm not going to name names, but they're all telling me all of their friends are getting the hell out of Dodge when it comes to Europe. Um, Europe is most likely going to be the first domino to fall.
Yeah, I mean, both demographically and possibly in terms of the outbreak of any sort of conventional conflict that might arise, that's for sure. Is there any, other stuff that you're seeing in the markets or any financial phenomena that you feel is driving this whole thing? Like, is BRICS a big factor in this? Is that something that you've thought about in terms of the US dollar as a reserve currency losing its status and how that might compare to other currencies?
Yeah, yeah, and one big misconception is that we're going to wake up one day and we're going to go from a U.S. dollar, world reserve currency, to a BRICS-backed currency or something along those lines. But if you look at history, the transitionary period away from the pound sterling to the U.S. dollar was effectively a 10 to 15 year period. Like, this stuff takes time. Most, like 95% or more of all world transactions are still conducted in dollars. So yes, the dollar is losing some ground on a DXY has been lately, but you still have a long ways to go until you start to see the unraveling of the U.S. dollar, for in exchange for a a gold-backed BRICS currency or a commodity-backed BRICS currency. That's probably a little bit far out, unless we see a total collapse of the United States. But that's unprecedented. That's never, we've never seen an instance where we've switched from one reserve currency to another reserve currency in less than a decade's time.
On the topic of U.S. dissolution, I think that most people think that because there's two oceans separating the United States from the rest of the world, that it's always going to be this a safe haven where the vaults are protected. But, we're starting to see civil unrest. And when Trump was almost assassinated, you almost started to see that fear that, holy shit, this thing could come undone. Like you could actually see like civil conflict in the United States. I mean, the only thing that is tanking, in my opinion, the USD is
Hmm.
the US itself, is if something happens within the United States itself. Outside of that, the only thing I'll say is that while it's true that the pound sterling transition to the USD it definitely took a minute. It's also the case that right before that transition took place, the pound sterling was like the top of the hop, like it peaked, kind of crested, like, and so if the USD is kind of cresting right now, maybe that's a sign of something else. I would say, yeah, the only way we're really going to see a precipitous collapse and transition to some other currency is if something happens in the US, which the way things are going, it very well could. I mean, we're really one Franz Ferdinand moment away from things just starting to fall apart. It's sad to say, but when you have so many provocative things happening on all ends, and it's like this pendulum, like,
Yeah.
Elon does something crazy, and then people start burning Tesla cars, and that forces a more extreme reaction to that. And it's just like eventually something's got to give. I mean, what are your thoughts living there?
Yeah. It's kind of like it's kind of become like a national security concern in some way, because if you look at 2020, if Trump would have won, I mean, things were ready to blow off back then in 2020. So it's kind of like a
Yeah,
pressure relief valve for the left during 2020. Fast
yeah,
forward to 2024. If Trump would have lost, then the right would have blown up. I mean,
yeah,
we could have seen. So it's kind of weird. And then in 2016, you had this disillusionment from white working class Americans.
yeah,
Obama was able to hold them from 2008, but by the end of his last term, he had lost that vote. So in comes Trump. The pressure relief valve from that group of people subsides. So in a weird way, it does seem like the red team versus blue team thing is kind of put in place to pacify any emergent revolution, any emergent.
absolutely. Yeah.
Yeah.
No, that's 100%. I mean, it's the dialectic that, and that's why, anybody who believes that their side is genuinely doing anything revolutionary is kind of deluding themselves. But I'm sure the powers that be don't mind, and this is why it almost seems like, and we're getting into the realm of conspiracy here, but it really does seem like the media is taking it easy on Trump this go around. Like I'm not seeing a lot of
Hmm.
the TDS from CNN. Like you're seeing the usual, but compared to what's going on right now, like you would think there would be a lot more, and it almost seems like they're accommodating and facilitating this in some way, almost as if, like you said, pressure relief valve. We got to let this happen. And, yeah, it's strange.
Yeah, I think, I mean, again, it goes back to World War III. Um, my suspicion is, this is speculation on my part, is that the military industrial complex, the intelligence agencies are forecasting a major war between China and the United States. They can't be dealing with all of these domestic issues between its populace. They've got to temper down the mood.
Hmm.
Trump, they most likely cut a deal with Trump. We'll give you some, you'll be able to have some domestic issues that you can play with in your sandbox. But like when it comes to foreign policy, you'll acquiesce by and large.
Right.
And so I think the realization is we've got to get serious here in America.
Yeah.
And I don't want this to turn into like a Canadian versus an American hockey fight or anything like that. But I think that's what the whole 51st state thing is about. I
Yeah.
think what he's trying to do is he's trying to create like this big fortress in the Western Hemisphere. I think he wants America to be in control of the Western Hemisphere because he does see this war coming. And why does he want control of Canada? greater influence of Canada. Well, you guys have the North Sea Passage. You guys have access to the North Pole. Who else is on the North Pole? Russia. Hold on a second. I thought Russia and the U.S. were patching things up. What's going on here?
Yeah. No.
Well, so I think it's all kind of lining up to, no one's ready for a war right now, but I think they're preparing for a war a few years down the line. The tariffs are put in place to incentivize American manufacturing, because when the war kicks off, trade will be much more restricted. So we've got to be able to make stuff here at home. We got to have full control over our Western Hemisphere. Some of the free speech stuff that's going on with the college campuses, whether you agree or disagree with, these protesters, it is putting in a mechanism to silence opposition. Whether you agree with it, again, whether you agree with it or not, could this also be pushed down to citizens eventually, U.S. citizens? I don't know. But look at what they did with the Japanese internment camps in World War II. So it does seem like they're putting all the preparations in place for something big, maybe in the 2030s or so. And Trump is just one piece. It goes far beyond Trump. It's not like Trump just had the idea. Trump is just the executive, right? He's the CEO, but he answers to the board. Who's the board? For you to find out, for you to guess.
Absolutely. I think you're right that the pieces are being put into place so that if they ever had to do some sort of military draft again, any sort of resistance could easily be legally corralled and just kept in check and quelled. So I think that on that positive note, we'll conclude. But I would strongly encourage people to go and check out Capital Cosm. Has a lot of great guests. And if you're somebody who wants to keep your finger on the pulse of finance, what the smart money is doing, then I would encourage you guys to go and check out his channel. Thanks for coming on, Danny. I really appreciate it.
No, I appreciate the invite. It was my pleasure. Again, I've been a huge fan of your work here, Nate. So very honored to be part of your show.
I just hope you're prepping. Are you prepping?
Oh, yeah.
All right.
Yep. Well, wait, I'm not supposed to tell people I'm prepping, though.
Oh, yeah, that's right. Yeah. Well,
I'm not prepping.
Yeah. As long as you don't get doxxed, and you're fine. Yeah. People are lazy anyways. They ain't leaving the house.
Right.
All right. Take care, buddy.
All right. Thanks, Nate.
The best way to support this channel is to support yourself by gearing up at CanadianPreparedness.com, where you'll find high-quality survival gear at the best prices, no junk, and no gimmicks. Use discount code PREPPINGGEAR for 10% off. Don't forget, the strong survive, but the prepared thrive. Stay safe.